Yesterday, we took a deep dive into the technology sector, exposing major cracks in some of the biggest names in the industry. But what if tech isn't the only sector in trouble? Today, we turn our attention to finance. Goldman Sachs, BlackRock, Visa, Mastercard, Wells Fargo, and Citi. The charts are flashing serious warnings, and if both tech and finance, which together make up about 45% of the S&P 500, are on the verge of a breakdown, what does this mean for the broader market? Are we witnessing the beginning of a sector-wide shift, or is this just a temporary setback? In today's analysis, we'll break down the candlestick structures, Elliott Wave formation, and key support levels to track the next major move for these financial giants. Let's begin. This is the weekly closure of the financial sector, and we are sharing here the charts for Visa, Mastercard, Wells Fargo, Citigroup, Goldman Sachs, BlackRock, Loves, and Chubb. So what we are seeing here is that the first row, Visa, Mastercard, Wells Fargo, and Citi, Goldman, and BlackRock, they all closed with strong bearish candles. But it looks like this is not enough. If we look at the even bigger charts, which are setting to close in 23 hours 51 minutes, so next tomorrow, what we are seeing here that Goldman, for example, and BlackRock, they are shooting for fairly big bearish candles here, especially the Goldman Sachs. In order to reverse the odds for this candle, it would need to rally tomorrow approximately 15% just to mitigate the bearish odds. I'm not saying to reverse it, just to mitigate. So this, I think this is kind of impossible scenario, 15% in one day. So we can assume safely that Goldman Sachs is going to close its 15-day candle, 15-day frame tomorrow with a strong bearish candle. And if we look at the historical perspective, this type of candle with all its technical support, which I analyzed just prior to this call, is probably the strongest ever I've seen so far for the whole history of Goldman Sachs. And I compared it to one of the biggest candles, so that's somewhat similar, happened in March 2018, which, by the way, after this one, it was a decline, a loss of 45% after this candle. And another one was in 2008, in 2007, in November 2007. This was a very similar technical footprint here. So this one was causing a big trouble too, and let's measure it. Well, Goldman Sachs lost 80% of its cap after this candle. So far, I would say that from technical perspective, from the technical footprint perspective, this candle is by far the strongest. Well, so if, let's say, let's measure it, let's say we have 45% here and 80% here. Okay, so let's say this is an average of 60, just let's be generous. And if we having 60% off, this is gonna be, well, 260. Well, that's what statistics says. And well, it's up to you to believe it or not, but candles are rarely wrong. Well, now let's have a look at the other charts, and let's deep dive into BlackRock. So BlackRock has been bullish for the biggest part of 2024, and this was our call in May, on May 10, when BlackRock was about 800, and this was the call here. And after the call, BlackRock safely added 35% until the end of the year. So the trouble started just recently in February, and we are seeing quite a few big candles. So far, this has been following our path nicely. Now we are looking for the wave 4 here. So wave 4 can be a little bigger, and let's have a look at the other charts. But before, yes, so this is what we discussed earlier in our calls. This is the weekly frame, and I'd like to emphasize that 8 by 20 EMA bearish cross here just happened marginally, but nevertheless it counts. If we look at the bigger frame from technical perspective, this is 15-day frame. We are seeing that it's on track. MACD, 15-day MACD is on track to make a cross. I think that it's going to happen next week, but we would need to wait for another 3 weeks for confirmation. And if we look at the 10-day frame, slightly lower, this has already happened, and this is cross not of the record magnitude, but the second one. And the previous one, the record one in 2021, it led to a loss of 48%. So we are talking about big digits here. So if the 15-day happens, well, it will be somewhat similar, but we need to wait. And this was our projection that we made early in February after we were seeing this double top formed by BlackRock. And this was our projection. This is purely on double top perspective. So the minimum call was 894, a loss here, and the double distance here. So 900, it's already very close to this level. It approached this level last week, but we are seeing a continuation here. Now, if we look at another perspective for BlackRock, this is the all-time chart that I was working on in October 2024. So this is right now, this is the perspective. So assuming that this was the end of wave 1, and we have a 2 months bearish engulfing here, which is a very strong in February. Now the perspective for the next 2 months, which is March and April, are very strong for bearish move. So let's see how it closes in 2 months. That's the perspective for BlackRock. Now let's have a look at Goldman. What we are seeing here is a very strong moves from candles perspective. This is so far Goldman lost 50 and 100 days moving averages, and now is approaching a 100-day moving average. Whether it's going to be a great support and we have a strong bounce here, we shall see. And for the weekly, this is a very strong bearish formation, and we are not seeing any reversal pattern there. The monthly looks very dangerous, a little lower, and it will be a nice either tower top or ceramic confirmation. And another thing, this is 15-day candle that I already discussed, and I'd like to reiterate that this is by far the strongest candle ever for Goldman Sachs. And when I am looking at these candles, and some memory flashes from 2008, and names like Lehman Brothers come to mind, well, we shall see. Now let's move on to the micro chart for Goldman Sachs. This is the wave of the top, which is the giant is forming right now, and what all I can see right now that this wave has been impulsive. So it might be an impulse, something like this, wave 1, 2, wave 3, somewhere here. Then we might have wave 4 and 5. So this wave is still forming, and it is kind of challenging to forecast it until we see at least a second bigger pullback. So far, we are assuming this is going to be an impulse of a very sizable degree. And for the last chart here, this is the chart that I've again started tracking back in November when we were seeing some ending patterns for the candles. So Goldman Sachs went a little higher here, and now it is had a perspective to move lower. So we are looking for potential of an all-time high here. So, but this wave is likely wave 3, so it's doesn't look like it was wave 5 from multiple technical perspectives. But even for wave 4 of that degree, it would be the targets here. So the most probable target is in dark red between 525 and 360. But we know from Elliott Wave theory that wave 4 often finds its support at the level of wave 4 of a smaller degree. And I'd like to put it in a different color so that you can see it better. So this is the level of wave 4 of a smaller degree. So this is, and now we have the most probable target here. Well, that's, and this is between 434 and 360. Well, that's, oh, and the date. Today is March 9th. Well, that's the perspective for Goldman Sachs. If it confirms everything, and it looks like it will tomorrow on the 15-day frame, I would like to show this candle again. 15-day, the strongest ever. Well, that's all, and I would like to wrap it. In both tech and finance, nearly half of the S&P 500 are setting up for a fall. What do you think will happen to the rest? Per the Pareto principle, it only takes 20% of the market to drag everything down. And with tech already showing major weaknesses and finance flashing bearish signal, the broader market could be at serious risk of a larger correction. We'll be tracking every move in our daily market waves report and premium insights at investingangles.com. Stay ahead of the market. Stock and crypto subscription, deep market coverage for just $10 a month, including major stocks like Apple, Microsoft, Nvidia, Bitcoin, and private Discord access. Reader membership, get access to select premium insights and articles. Follow us for real-time updates, YouTube, Twitter, Telegram, Reddit, or Investing Angles. Like, share, and subscribe so you never miss a critical market update. Thank you for watching, and as always, happy trading.